Hello, hello.
Long time, man. How are things?
All that Shivaji Maharaj thing is gone.
Yeah, I had to travel a lot, man. I didn't want to get pulled out of lines, man. Oh, मेरा थोड़ा ज़्यादा ही था. It was, I think, 28 centimeters or something towards the end.
It used to look good.
Yeah, thanks.
Okay, so we'll start now.
Yeah, let's go.
So, you're hedge fund manager or hedge fund analyst. What do
Hedge
you want
fund
to call it?
analyst, yeah.
Hedge fund analyst. Okay. There's this sense of mystique, around what. So hedge funds are like those black magicians, right?
Yeah.
There's this sense of mystique. So what we want to discover today is we'll probably start with your introduction. So, we will know a little bit more, but we want to introduce, we want to understand how the hedge fund industry really works in practice. Like, do they do all the weird things that we read about?
Yeah.
So let's start with you first. Start with your school, your whole education journey.
Okay.
Then where did you work, which year, and then how did you progress, and how do you end up getting a job in hedge fund sitting in India? That's crazy. How did you do it?
So, you know me, my name is Anirudh. I've studied, you've helped me pass my CFA at one time in my life, and I've also done FRM after that. So, my primary journey, I was born and brought up in Mumbai. I studied in a small school in Khar called BPM. And then I went on to do commerce in National College. After that, I was with PricewaterhouseCoopers to do my CA. After clearing CA, in fact,
articleship.
PwC
was articleship.
Yeah, PwC was articleship. And before I cleared my CA, I actually interviewed at a client that I used to audit called CLSA. And CLSA was the biggest FII broker in the country at that time. And I really wanted to be in research because, the department in PwC that I worked in focused on financial companies. And so I used to audit companies like Zurich, Kotak Securities, things like that. And it was always a curiosity because from my family, nobody ever done anything in the stock market. So for me, it was more of a novelty or a curiosity, and it was interesting. Like I used to see deals. So audit mein ho rehta hai ki you have to look at the deal ticket, and then you see the contract note, and you see the trade blotter, and see that everything is done. So I was like, okay, I can see this guy's buying this and he's selling this, but I don't know why he's buying or selling this. And I had no one to ask to. So actually, when I first interviewed at CLSA, I had zero idea of investing. I never invested a single rupee in my life in stocks.
You started with CLSA as a equity analyst, or
so CLSA had a department called Evaluator, which was basically like a quasi-quant division. And for me, to get an entry, because this IIT-IIM combination was more preferred for these kind of roles. CA did not, unfortunately, have that kind of an exposure. I don't know if it's changed now or what, but at that time, so for me to get a foothold into the industry was very important, and this was a foothold in like one of the best players there was. Like CS used to regularly win the Institutional Investors Award for Best Research and things like that. So Evaluator basically worked on helping clients make decisions. So the clients of the broking firm. So we could actually do anything they wanted, whether it was data crunching. So I'd actually learned programming for that. So I used to program in Sybase, which is a backend.
Very good.
And so it was.
And those of you who do not know, for CA's programming is a complete black box.
Yeah.
Something we don't think we'll ever do in our lives.
But now I think Python and all is there, so people are slowly learning, and it's for data analysis. So this is exactly what I did, except we had an extensive database behind, and Evaluator was one of the key differentiators of CLSA with other players as well. I mean, there are a lot of clients who liked CLSA for this department. So I worked with them for 3 years. After around a year or so, I kind of.
This was in which year?
This was in 2000. This was in 2004, 5, and 6. So these 3 years is what I was there.
So you started working. This was your first job, right?
This was my first job. Yeah. So
and I believe that's one of the perk of being in Mumbai, right? Because had you been in some other city, I don't think you would have got CLSA type of opportunity.
Yeah, of course. I mean, that's the thing of being in Mumbai, right? I mean, it's the financial capital for better or worse, and it really helps. Though I now do think there is some opportunities opening up in places like Bangalore. I think there's a company called Spark Capital, which is in Chennai as well.
Which is really good, yeah. They're doing good for you.
Guys and they focus on like these lesser known names and things like that. then obviously there's some amount of work going on in Delhi, and now I think there are a few family offices, PMIs in Pune as well.
Yeah.
So it is, the equity culture is spreading a little bit, so that helps. So anyway, so along with this evaluator work, I started working with two other analysts. So now one of them works is a senior guy in Capital Group, and the other is Hedge, one of the other MNC brokerage research houses in India. So I used to work with them for banks and for mid caps. So I was like kind of assisting them. So I learned a little bit of analysis, how to make a model, report kaise likha jata hai, some preliminary stuff I started. So I was basically working for like 18, 19 hours a day because I used to do my work and then work with them. And that was okay. When you're young, you can really push your body to the limits. So there are days when I often took the last train back home or the first train back home. So it's made a lot of colorful characters in the Mumbai local. So yeah, but that I worked for 3 years, and then we had a client that time called Sovereign Global Asset Management. It was one of the biggest investors in India at that time, and it was run by two brothers, and the brothers split. And the younger brother's analyst was looking for someone to help him with the work. And so I'd kind of worked with them earlier for helping them with some research. And also my colleagues in CLSA highly recommended me because they knew I wanted that kind of a role. So I was interviewed by them, and we hit it off. We really liked the way, each other kind of we saw, how the way we look at things is largely similar. And after that, they made me an offer. So I'd gone to, that's the first time I moved out of the country to Dubai. So there I was for 3 years, 2007, 8 and 9. We were large investors in India. Now this was an interesting fund. We took, I can't reveal the numbers, but it was a multi-billion-dollar fund. The returns were eye-watering. Actually, they're done really well.
Managed by how many people?
Managed by like a handful, like 4 or 5 people at most at any given point in time. Sometimes by 2 people. So when I joined, it was 2 people, my boss and me, and the principal. But the principal, obviously, he was not working with managing the fund. The idea was
equity. Pure equity focus. Pure equity.
It was pure equity. We could do anything, right? It was one person's money. We could do anything. So I have evaluated some private equity deals as well. I have evaluated. There was a proposal once, I think, to buy some rainforest somewhere as well. So there was really, literally, there was nothing off the table. But we preferred equity because of the liquidity it offered to get in and get out. And that time we were very focused on India. So the idea was to take very concentrated positions in stocks, and that really honed my skills because that's the only risk management there is. Then you have to just understand your company inside out. There is nothing else, and you have to understand its business inside out. As well as you could sitting outside. So I worked on that for 3 years, and then I got bit by the entrepreneurial bug, and I decided to set up my own fund. So me and 2 ex-colleagues from CLSA, we set up a fund in Zurich. That's when I went there, and it was like a really ground up thing. I was fixing the tables on which you would sit and setting everything up, getting in your office, putting in the coffee machine.
Which year was this in?
This was around 10, 11 types. So
that's a lot of courage to have, right? To go and set up a fund.
Or a lot of stupidity. One of the two. So
most of the big ideas is stupid.
Yeah, it's not clearly delineated. So and to be fair, so our problem was we did not start off with enough money.
Right.
And this is one learning that I took away, that if you ever start your own fund, do not start it for anything less than $100 million, because otherwise you just running your office, paying people fairly, paying yourself fairly, it becomes difficult, and then you end up becoming desperate and taking decisions that you otherwise would not have taken. You become like a trader mindset, Or ye thoda hua hamare saath. So though to be fair, we picked some really good, like even today when we chat, we're like, man, we were just unlucky. This was none of the stocks we bought blew up. We used to own a lot of the Indian IT, these website names, the shadi.com wala. We owned a lot of
Naukri.
Naukri, which is done really well. I mean, if you look at it from 2010, of course, right? We used to own automation names in Japan, so companies like Naptesco and stuff like that. We own some good names in China. We own some travel names. So we picked good stocks. Unfortunately, we did not have the holding power to continue, and we were 30% invested in Japan the day that earthquake hit. So I mean, that was just, I mean, it was, I mean, you don't model for like
Unfortunate. Yeah.
I mean, you don't model for an earthquake followed by a tsunami followed by a bloody nuclear meltdown. So this was not in our models, and after that, it made no sense to kind of continue. We just kind of, I mean, that was a spectacular, glorious failure because we all learned a lot from it.
This went on for how many years?
Around 2.5 years or so.
And when you started,
Yeah,
see, I have flirted with that idea for years,
yeah,
starting a fund, and same thing, right? So 100 million is like 500 crores, because I figured the economics just doesn't work if you
yeah.
if you have an AUM less than 500 crores. So when you started, did you have some commitments from investors that you're going to get some checks or?
The commitments and the checks often have a big difference. And a lot of people, so I'm not saying they're lying, right? I mean, they're not, because they're very good, honest people. But the thing is, they want to first see the performance and then give the next check. And often the performance doesn't happen if you don't have enough, because you're just kind of running to stay in the same place otherwise. So the best thing is to start off with at least $100 million. So even if you have like a 220 structure, which is 2% management, 20% carry, 2 million is like a decent sum to pay yourself, at least $100,000, and employ a couple of analysts, get a few Bloomberg screens. Brokers will also take you a little bit seriously. So have a nice office somewhere. So all these things are important, and that's something we learned, that you can pick great stocks, but sometimes life just doesn't go your way. We would have still made it if the damn earthquake did not happen, but we couldn't kind of control some factors.
And what kind of performance did you have before this event for 2.5 years?
We were slightly up, actually. I don't remember the exact numbers, but I know from inception to closure, we were down around 7%, which is not bad at all, considering
after that
80% of our portfolio was basically going up. So something around.
This was, sorry, which year?
It was around 2010, 11. So that the markets were not great as well at that time, because it was coming out of the crisis. So technically,
was that also the European crisis around the same time, or did it come a little later?
European crisis did not affect us much, because all three of us who ran the fund. So the fund's name was Montague, Bonsor, and Limay Capital. So there are three people. So all three of us came from an Asian investment background. So all of us kind of were primarily looking at an Asia long short. So we did a little bit of Australia, we may do a little bit of Canada, because a lot of potash.
So this is a long short fund.
Long short fund, but we did not pay attention to our shorts a lot. It was like if we bought something in Japan, we wanted to be short the currency because we didn't want to take exposure to the currency, something like that.
Right.
So we wasn't very sophisticated, but and that was fine. I mean, to invest in Asia, you don't need to be necessarily long short, because the market tailwinds are actually quite strong going forward. So anyway, so we were there for around 2-3 years. Then I came back to India. I worked with a couple of. So I was not that keen to get back into broking, to be very honest. So I moved to Pune around that time, in 11 or 12, something like that. And I worked with a startup. I started investing my own money in the market quite diligently. And I just had a lot of time to do things that I really wanted to do. I learned astrology because I was very learning.
We should have a discussion about that.
Yeah. So that's what I'm saying. When you have a little bit of money, right, you should learn how to also stop and smell the roses and take your time, because otherwise you just burn out. So luckily, by God's grace, I was in a position to do that. I got married around that time as well, in end of 13, I think. Date yeah. It was around, it was December 30th. So in 2013, I got married, and she's from Pune, so she insisted that I don't want to move to Mumbai. So that kind of, I was okay with it, because I didn't want to work in broking as such.
Hmm.
So I was kind of, I was okay talking to people from Mumbai, but not really interested in moving. And then we had an opportunity to move to Germany just a few years ago because my wife's company actually was working on very high-end projects for BMW and things like that. So I said, it's a great opportunity. You've never worked abroad. This will be like a good thing for your CV and everything. So we moved there. And mera kya, I can work from anywhere, right? Because if I'm investing, I'm just the best part about investing and really is a privilege is that you just need an annual report on your head and some time to think. That's all that you really require. And so we moved there. We stayed there for around 2 years. And that's around the time I got in touch with my ex-colleague, again, the same gentleman I had started NBL with, and I'd also worked with him in CLSA. So he's an Australian gentleman, and he lives in Switzerland. So, and he said, look, we're looking at a few things and we're tied up, and can you help us just on a consultant basis to look at a few companies that we haven't got a chance? So I jumped at it because, Europe is not a market that I'd ever looked at earlier. Even as part of CLSA, obviously didn't look at it because it's a Asia-focused broker. As part of my own fund, obviously it was again Asia-focused. As part of Legatum, which was my company earlier, that I learned a lot. Again, it happened to be Asia-focused at the time I was with them for 3 years. And generally people look at the US and people will look at Asia, for tech and growth and things like that. Europe ज़्यादा कोई देखता नहीं है, generally in my experience. But Europe has some of the most high-end, tech-driven companies. And by tech, I don't mean like TikTok, Facebook types. Really core engineering
hard tech
companies, hard tech companies. I mean, companies like literally like ASML is a company that we've talked about earlier. I mean, that's literally a company the world would shut down if that company didn't exist or if the company shuts down. So these kind of companies existed. So for me, it was like I love analysis, right? I mean, I love looking at stocks, love understanding business models. So I said, look, this is a new thing for me, so I'm happy to do it. And I started working with them, and then slowly, the work kind of built up. And eventually they said, like, do you want to kind of do this full time because you're anyway doing this full time? So would you like to kind of join us? And I said, yeah, I mean, because I was anyway doing, I was thoroughly enjoying it because I could see the NAV and I was basically almost a part of a team, just not officially Christian yet. Then it kind of seamlessly became a very formal thing. And I started working with them. And yeah, I mean, that's been the journey so far. So I work with Europe. We primarily look at Europe. We are also a long short fund. The name of the fund is Engadine Partners. It's part of the Julius Baer kind of family of funds. That's something that happened recently. So yeah, I mean, it's going great. Our performances have been very good for the last 3 years. Performance last
even month. Now.
Yeah, I mean, you'll be surprised. Even we are surprised actually a little bit. But no, but we do put in a. So I'll tell you something that I've realized in the industry is that the proportion of people who actually read the annual report of a company is lower than what you think.
100% agree.
Yeah, and
whatever you think, maybe divide that with 10.
Yeah, I mean, it's really shocking because I mean that's the primary source of information about a company, right? And a lot of people rely on brokers' reports and things like that. And we're a hardcore kind of fund. We personally, I anyway rely on the annual report a lot. That's the first thing I read. First thing I read is usually the audit report, and then I start reading right from page 1. So and we build our own models for companies as far as possible, and we make projections for the next 3 years, like not very detailed. Buy side models are very different from sell side models, so we do make buy side models, and we really get into the nitty gritty of the company. So we actually work very hard on the stocks that we've picked to understand their company, understand their business, and to make projections. So in that sense, performance is not surprising because a lot of things get brushed under the carpet when you look at broker notes.
Then again, just playing devil's advocate, hard work
Yeah.
does not necessarily translate into good returns. That's
It does.
something that I've learned.
Yeah. Okay. So here's my thing. I mean, I am a big believer in the role of luck in life. There, like, I mean, my fund blew up because of bad luck, right? And there's, like I said, I had not factored an earthquake in my model. So, role of luck is huge in life, but there is effort and there's luck. So fundamentally, if we accept that we cannot predict the future, we can at least put ourselves in a place where good things can happen. So luck will always be the final defining factor, but what proportion तुम उसको अपने outcome में देते हो, it becomes important. I mean, if I just blindly go and buy like 5 small cap stocks in India, what are the chances?
No,
I have to be super lucky.
I agree with that 100%.
Yeah.
My point is having good performance in the current window, right? That's extraordinary.
It is extraordinary.
Yeah, and there is definitely some secret ingredient to what's going on there.
Okay, so even 2 years back, right, when the Stocks 50, which is the Europe like a Nifty type index, was down, we were up 20%. So this is not new for us actually. So we being a long short fund, so the idea is to find shorts that will more than compensate for any depreciation of your loss because of market action. So in that sense, what is the secret? Secret ingredient is really that, honestly, if you just read the annual report, a lot of issues become clear. It's shocking that not as many people as I thought would be doing it, are actually doing it. So
I agree. Yeah.
I think
quarterly presentations and then one research report and you're done. Company, right?
Yeah, I mean, some of the companies that we've shorted, I have seen like glowing buy reports from the sell side, and I read the prospectuses and I'm like, yeah, how can anyone write a buy report? I mean, there are companies that we shorted where they're like online kind of retailing companies where the promoter transferred all the warehouses to his own name, and the company is now paying like a 10% rental yield, which is a very large rental yield now, especially for Europe, to the promoter, and the company is making losses and the promoter is getting the rent. I mean, these are the kind of companies that brokers are looking buy reports on, and I'm like, how can this? And that's just one. So I have a favorite phrase. I say there's never a single cockroach. So if you see a cockroach in your house, he's not the only one there. There are thousands there somewhere, hiding. And so the question is, once you find something wrong with an annual report, honestly, sometimes something can set me off. It can be as small as a spelling mistake in the annual report, because that document is reviewed so many times. I know, because as an auditor, I know every comma and full stop.
If you use that logic,
yeah,
I would say in India, you're eliminating 95% of the companies in India are, especially mid caps and small caps, are out of your radar there.
Yeah. India is anyway, because we're a Europe focused fund, but India is actually a very simple market to invest in, to be very honest. Because like you said, 95% companies to chalega. To make a 5%
you should run a filter on spelling mistakes. That will be a cool filter. I'm sure there will be a lot of annual reports.
Okay, but see, there are things, right? I mean, for example, like in India, it might not necessarily be a fair thing. It's not like English may not be a native language to someone who's preparing it, especially for small and mid caps. But in Europe, US, I mean, I'm not saying I focus on that. I'm saying something as small as that can set me off on looking for things. And once you find one thing wrong, right, guarantees that there are going to be other things wrong. Look at the incentive structure. Is the management incentivized only on sales growth? Is the board really independent? Or has the chairman is a big shareholder in the company? Has the chairman worked with the CEO much earlier than earlier employment? So these kind of things. So I actually come into my own when I'm shorting, because I really enjoy looking at.
So let's talk a little bit about this. I think this is very interesting. What's your long short ratio right now?
We are net long, around 50% or so. But yeah, and we are now slowly reducing shorts as well. So
reducing shorts, okay. And this is purely fundamental, bottom up driven.
Purely fundamental. Technicals are important, but they're not as important as like it's a tool of analysis, right? It's one of the tools of analysis, especially when you're timing. Like I would be loath going long a chart that's like in a secular downtrend. I mean, that's just where the money is not flowing into it. It's simple. So I don't want to piss against the wind. But primarily, I think fundamentals is what we focus on.
So my question to you is, how do you build conviction on short, and what instruments do you use in Indian markets to build that short position?
Well, not in Indian markets, obviously, but in European markets. But in because we don't do India at all, right? So
you're not doing India at all.
We're just a Europe focused fund. We do a little bit outside, so we might do a little bit in Australia sometimes because they have exposure to Europe, right, or sometimes in the US. But not in India. India is difficult to short as well because high, especially small mid caps where you'd want to short, it generally has a high retail ownership. And generally, when a stock has a high retail ownership, it's difficult to get borrowed because the ownership base keeps changing quite a bit. So we primarily do Europe for shorting, sometimes in the US.
How do you build conviction about short?
Okay, so one is finding a company that you want to look at, right? There are a few ways you can do this. You can screen for it, obviously. Like, kya screen karoge? Like bearish, for example, you look at something which is a very bad bearish score. You download the data, you put the formula in an Excel sheet, and you can keep screening like that. The second thing is look for companies where this intangible as a percentage of sales has kept on going up. Because that's usually where companies hide their sins, right? And intangible here. How do you know?
So you're looking basically. So your theme is fraud, like or shenanigans,
or businesses in secular decline. For example, with cars going into becoming electric, a lot of traditional auto ancillary players will not be able to keep up. Or there are businesses where you expect them to do much better than they will actually do. Like for example, even in the EV space, battery makers. Now, a lot of battery makers, I'll not give the names, but there are quite a few in Europe, and they did really well on this theme that batteries will do well. And yes, they will do well. Like LEDs did well, right? But which LED company made you a billionaire? No one. So thing is, question is not what sector will do well. The question is what part of the sector is the most of the value going to be realized in. So do you think a Tesla is going to say, okay, I'll make a lower margin, let the battery maker make a higher margin, or anybody, is Mercedes or BMW, anybody going to do that? Obviously not. No one's buying the car for the battery, right? They're buying the car for the brand, for the performance, etc. So eventually what happens is, if you are not the value creator in the industry, the value creator will squeeze you down, because even that person under stress, usko bhi gaadi ka price kam rakhna hai, usko bhi research karna hai. And the way they can do it is, one, they can obviously cut you back on pricing. The other way they can do it is, obviously they can push a lot of their research burden onto you, forcing you to do the research. And ऐसे उनके पास 5 supplier होंगे कम से कम, because they're not relying on one supplier, right? So industries where you feel that the industry will do well, so I'll buy something in the industry, may not always work out if that industry is not. Like for example, travel industry doing well, for example, right? Most of the ROCE in travel is recognized at the end of the agents, not in airlines, not in hotels. It's at the agent's place. So अगर तुमको travel में invest करना है तो look at agents, generally speaking. Okay. I'm speaking very general terms, but to highlight the idea that just because sector is going to do well doesn't mean that all players in that sector will do well. So 3 kinds of shorts. One is companies in secular decline, like I said, auto ancillaries, which focused only on like these ICE cars, which is internal combustion engine cars. Second, even in growth sectors, the player who will not be the reservoir of value in that particular sector. So there's going to be exuberance built into their price, which will eventually go away. Third is outright frauds. Now, outright frauds can happen in normal everyday companies. They can happen in sunrise sectors, anywhere. So yeah, these 3 primarily would be. I prefer the third kind because CA
stimulating.
But I've looked at all 3 actually as part of working here. So first to require a little bit of imagination. So that's fun as well. So yeah.
Right. And if you're building secular short plays, that means you'll have to wait out for a really long period for the theme to play out, right?
Yeah.
At least 2-3 years for what you're thinking now to become visible. So
Some
do
of
you
them,
hold
yeah.
your short positions that long?
Yes, we have held some of our short positions for that long. Some of them play out very quickly. Especially markets like these are amazing, right? Because they really stress companies, and companies that are making up cash will actually run out of it very quickly. So they'll have to do equity issuance, they'll have to borrow and stuff like that. So they reveal themselves very quickly. So it was good to have a good sized short book going into the crisis. But yeah, there would be some short positions which is like a slow grind. Every year they'll keep reducing 10-15%, 10-15%. But that's enough, right? I mean, if you have a fund which is giving you even 15% return on a regular basis, it's a great fund actually.
Have you ever analyzed is short is what it's contributing to your alpha in this market? Is that's where
I actually have received that report, but I haven't, because we just finished yesterday, so I'm taking a little bit of break, so I haven't actually seen the.
Yeah, because I'm guessing like now that I understand your product a little better, my guess is that short side might be contributing a larger alpha in this
shorts
this
did
environment.
really well. I can tell you that. I mean, large percentage of our performance this quarter has been, especially last month, has been the shorts. I mean, they're the real heroes. So we're very proud of the shorts.
So, do you have to be a little pessimistic, Anirudh, to like, because every time I think of short funds, right?
Yeah.
I think you look at someone and you say ye girega, right? You look at someone, this company is destroyed, this is dead, and then you build position.
Let me tell you this: pessimists don't make any money in the stock market, because you have to be an optimist in general for your life as well. So mera personal mantra hai, I call it God, or people who don't believe in God, I call it DOG. Dogs as well. So it's basically gratitude, optimism, and discipline. This is something just I coined up and made up. And I think these three things are very important for a peaceful life and a generally joyous life. You need to have a lot of gratitude for things that I mean, imagine the fact that everybody who's going to be listening to this conversation does not have 90% of the problems that the rest of the world has. That's why unke paas ye bandwidth hai ki wo dekh sake. I have gratitude for that. To be optimistic. An optimist is often wrong but always happy. A pessimist is often right but always sad. What's the point? So, and discipline. Discipline is very important because it really differentiates the successful from the super successful. And it allows you to stay the path when things are not working out. I know the stock that I recommended to you and it fell 80%, and I was like, it makes no sense, because and eventually it went up and it was taken over by a company and we all made money on it. But the discipline to research companies, the discipline to not get carried away by some system. Ek to stock market mein koi system kaam nahi karta hai. There is no system. If there was, no one would be teaching it to you. So Jim Simmons is not going out and selling his algorithms. He's making money out of them. But he's like a world-class mathematician. We are not Jim Simmons, and he has access to like crazy amounts of computing power. So, but nobody else is. There is no system. There is no pattern in the chart that you figure out. There's a skill. Things keep changing. So it's hard work actually. Stock market. Like if anyone thinks it's not hard work, it's wrong. It is actually hard work. And it's fun work as well, because you can't work hard if you're not having fun generally. So these three things are very important. I think be optimistic generally in life. You don't have to be pessimistic. See, look at it this way: by shorting a company, you are actually directing capital away from unproductive ventures.
Yeah, that makes sense. No, see, so you're basically optimistic about pessimism in a way.
I'm optimistic that the work that I've done is right. So and I could be wrong. I mean, we've covered shorts that didn't work, or we've covered longs that didn't work, or we sold longs that didn't work. So that's fine. But I think where problems start is when you haven't put in the work. And there are some names that you kind of initially do the work and you put them on, and then you do a little bit more work and you figure out that initial thesis there's nothing wrong with that. You can always इंसानी गलती करता है. So and गलती के बिना सीखते नहीं हम लोग. So both are important. Make a mistake, don't stay wrong. And that's the beauty of this profession, right? It has an amazing elimination mechanism. People who think with their ego and not their brains are usually uh, heralded out of the market. So because they can't stay solvent for that long, they can't hold on to a company. And if you worked hard, then you don't need ego. You know why you hold a stock, and you generally only sell a stock when your thesis is wrong, or you have a better opportunity, or a thesis is played out. So that's fine. So yeah, I think just optimism is generally very important in life. And like I said, pessimists
100%.
kept saying that the market will fall for the last 3 years. But eventually they'll be right. Sometime market is going to fall.
Yes.
But I'm telling you, they haven't even made money in the fall because they did nothing. They took neither long nor short. So this is the issue. So,
Yeah, I mean, none of the economists are big investors.
yeah.
Big investors would recruit, and but see, these are some words of wisdom. I really liked it.
Yeah. So this
I
is
100% agree on optimism front as well.
yeah.
I think you have to be otherwise, because what I think has happened is news, right, or social media in general.
Yeah.
You get better views if you use negative words. In fact, I discuss this with my social media team also. They say, why don't we put this word so that we get slightly better views? So that's psychology is built around. People are so therefore the number of news that you're getting or the pieces of information that's coming to you, more in percentage terms, a lot more of them are going to be negative in orientation.
Yeah.
So as an investor, if you get affected with everything, right? Just say there's a company I'm invested. You probably know it's a pharmaceutical company.
Yeah.
So random things, right? So the promoter celebrates his birthday, and then people say, this guy is exorbitant, or people will make things out of anything.
Yeah.
And if you get affected and decide that I'm not going to stay invested,
See, we are primed to focus on the negative, right? I mean, during evolution, it was not the happy things that killed you; it was the sad things that killed you, right? Tiger attack. So your brain is primed to remember negative incidents. So it's actually you have to work hard to look away from them. Not so keep them in your mind, but don't focus on them. So you have to learn from them, not focus on them. And basically, यार तुम इंडिया में रहकर अगर optimist नहीं हो, तो see, economics is eventually demographics. This is what it is. All economics boils down to so formula वगैरह छोड़ो, they finally it comes down to demographics. The place with the best demographics will do well because they have demand. Eventually, being done for the people, right? Whether you're selling hair oil or you're selling semiconductor equipment, eventually it's because there's some eventual consumer. So I think it's very important to focus, and it allows you and gives you the drive to work hard. Because if you think nothing will work out, why will you work hard? तो तुम कोई pattern ढूंढोगे, or you pay someone a lot of money to teach you some system, and trust me, if there was a system, no one would waste their time teaching it. So it's not, there is no one answer. I mean, sometimes you buy great company and the stock price doesn't perform. There is no answer to this. But तुम्हारे हाथ में क्या है? Stock picking is an art and a science. At least work hard on the science part. Art आ जाएगा. See, there's a big difference between me and
so let's structure this. See, so you're one of the smartest research people I have met last 5-10 years, and we worked on few ideas together. One of your ideas has made me killer gains because I bet big on it. And I really love the idea, and I think that idea came to me at the right time because we discussed about it. That time I was busy, so I didn't study it. And then when I started studying it, the stock was like 1/5 of the price when we originally discussed.
See, this is luck.
Yeah, this is luck. Correct. I agree 100%. So now I want to know what's your process, right? So let's say start with how are you screening the ideas? Is it a structured idea? Screening. Second, then how do you start your research? What do you do with the company? Which all sources you read, and then eventually how do you build conviction?
So the idea will come to me in multiple ways. One would be some simple screening of charts, for example. If I do relative charts of the companies versus industries, and I find something is breaking up, I'll use the chart for this purpose to find out where money is flowing, and then I look at this particular company. Then it has to satisfy some basic criteria, right? Basic criteria meaning what? कि उसका market cap ढंग का होना चाहिए. It should not be like a micro cap, right? It should have some liquidity so we can buy it if we choose to. The business should be.
This is for your fund. This is
for my fund. Okay. And business should be something that we want to be. Now, I personally prefer high IP businesses, which cannot be weaned away easily, right? So the next thing would be, or the idea could come like some investor that we respect has shorted or gone long a particular name. That would be a starting point. Why is this guy short here? Let me have a look at the company. So यहाँ से भी आ सकता है when they report the shorts. But the starting point is always the same. Start with the annual report. Read the annual report from cover to cover. There are something like you can first read the audit report and then read the annual report. जो भी है, मैं तो cover to cover पढ़ता हूँ. And
so you read like from first page to last page, everything.
Yeah, first page to last page. I mean, in fact, this is a report that I'm reading right now. I will start reading it this week. It's called Rational.
Oh, I love this. You print it. Can you show it again?
Yeah, it's.
I want to see the name of the company you hate it.
I'll tell you, it's Rational. So Rational is a company that makes kitchen equipment for commercial kitchens. So
okay. Interesting.
So ये कैसे मिला मेरे को? I was just screening for companies with high gross margin. So high gross margin. See, what is gross margin? Gross margin is I take something and I add something to it and I sell it at a price. So gross margin is actually what the value that I have added.
Accretion.
Accretion. What is value accretion? So for me, gross margin is very important because it tells me कितना value मैंने add किया. Gross. So like look at this way, if you take a piece of art, the gross margin is infinite, right? Because you're selling something for like maybe $100 million and तुमने क्या use किया उसमें? Some paint, some canvas, कुछ नहीं. और उसका return on capital भी बहुत ज़्यादा है because तुमने कोई capital भी नहीं डाला.
Now, I never thought of economics of manufacturing painting, but it's very interesting.
Yeah, but this is the I mean issue क्या? This is a very niche kind of a thing. So ये कहाँ work करेगा when you have like a patent? कि I'm licensing out the patent. That's the equivalent of licensing out a patent actually. Now, because again, very high gross margin because production cost ho gaya, and there is no capital employed as such, so you have a high return on capital. But gross margin is very important for me. And a rising.
So basically, a high gross margin indicates something patent-like, right? Which is a very high value accretion, which cannot be replicated by other people.
It's hard to replicate. Before we started the conversation, I mentioned a company in Switzerland to you, which makes fabrication. It's basically a fabrication company. None of their machines are like unique machines. They buy off-the-shelf machines, so they add their own bells and whistles to them. It's a different story. But most of them can be. So the person who was taking us through the factory said that all of our competitors can buy these machines and do the same things we've done. But over a period of time, the experience that we've accrued, the processes that we've developed, they've actually created something that allows us to have a 63% margin on what is effectively a fabrication business, which is amazing. And when we actually saw the things and the purity levels, etc., that we discussed with you, it really. So, is there an IP there as such? Maybe not.
Small things that you learn, right? With years of manufacturing.
Exactly. No, I mean, look at ASML, right? ASML is another company which makes machines, which makes microprocessors. ASML machines, I'm sure there are several companies or several countries, we'll not name them, but they've tried to reverse engineer those machines, but have been unable to do so. Now, that level of engineering pedigree is actually very hard to get. It's hard to replicate. So, these kind of things matter, and that's reflected. So, whatever you see in the annual report, right, it's indicative of something behind. There's a story behind the story, and then you need to understand how sustainable that story is. So these numbers will help you कि हाँ ये company मुझे देखना है, and then the annual report will tell you कि ये जो result आ रहा है वो क्यों आ रहा है, why is this result there. So I am a big advocate. This is the most under-recommended investment book, and I'm telling you, मेरे recommend करने के बाद भी कोई नहीं करने वाला है because it requires a lot of hard work. Michael Porter's 5 Forces. It's the name of the book is Competitive
Advantage.
Strategy. It's competitive. He's got written 2 books: Competitive Strategy and Competitive Strategy is the first one. Basically, there are five sources of a company's power or whatever, competitive strength. They come from the level of competition in industry, bargaining power over suppliers, bargaining power over customers, availability of substitutes, and threat of new entrants. These are the only five places. If you analyze any company based on these five metrics, and you really you put intellectual rigor, you put time, and you analyze based on these five things, your company level pick will not go wrong. So you may buy this good company at a wrong price. That's a different story, right? But at least you will not be wrong in your investment thesis. So all these things, high gross margin, a sustained ROCE, lower level of investments required, things like this. There's another good book actually. It's an easier book to read, called. It's written by a guy called Hamilton. It's called Seven Powers. I don't know whether you've heard of this book.
Seven Powers.
Seven Powers. So what he says is that there's a company goes through three phases. It goes through, one is the inception starting phase, then you've got the growth phase, and you've got the maturing phase. So at every point in time, different powers, you are able to harness different powers to make your company a very strong, competitively positioned company. At the inception phase, you could either have cornered resources like an IP or some sort of a mine or something like that, or you could have what is the second part is cornered resources, and then there is counter positioning, the way you position your company versus incumbents, and only a new company can do counter positioning. Then during
how does counter positioning work?
So counter positioning, the best example is you do something that your competitor will not replicate to his own detriment.
Interesting.
So I can give a political example also, but I will give a less political example. When earlier watches used to be sold in jewelry shops earlier, 20, 30 years back. I remember at least our generation, I'm slightly perhaps older than you, but my generation, ghadi milna was a big deal. Like, if you scored really well in school,
HMT days in India.
So, to get a watch was a big deal. It was a big deal everywhere actually. People used to watch pen ke aise hi chalte the.
This was before 1990s, right? Because then the Japanese,
exactly. So now what happened is, so all these companies, Rado, Rolex, whatever, they used to all be sold in jewelry stores, and they're still big brands. There was a company called Timex which came out in the US, and Timex decided that we will sell our watches in pharmacy stores. Where common people go, factory workers go, so now this is so amazing that they didn't even target the main distribution channels. They targeted pharmacy stores where everybody can go, knowing fully well that even though some of the bigger watch brands, I mean, you don't have to directly go to Rolex, I'm sure there are mid-level brands as well, saw that part of their market was eroding. They could not bring themselves to sell their wares in a pharmacy store. So the incumbent player is usually invested in a certain way of doing things, right? And when an upstart comes and starts doing something very differently, the incumbent feels that he cannot change what he's doing because he's already put in capital, time, expertise into this particular system. So he'll not change. So that is basically.
That's really cool, though.
Yeah,
I mean, because those days, right? We're talking about which, like 90s.
It's happening all the time, actually. It's happening all the time where you see incumbents. I mean, think of all new technologies where you had a big incumbent and a small player came and actually became very big. Like, for example, I'm just making this example right now, so forgive me if I'm wrong. Orkut came, it was everything for everybody, right?
Social. Yeah, of course, yes.
And when Facebook came, it was built originally in just one dorm of one college. So it became very hyper local, and it started getting people. Now, Orkut, if it wanted also, they could see Facebook growing because it's growing based on colleges to colleges, right? And going to clusters of colleges and things like that. But Orkut, even if it wanted, it could not have actually gone and done the same because they're already too invested in a different way of doing a business. So this is something, and you'll see this in politics also. Upstarts come and they suddenly become very big over 10, 15 years. and the incumbent is put in a position where they are unable to replicate that person's strategy because they have invested so much in some other narrative that they're not able to shift, even knowing that it's not working.
This is really cool. What is this called? Counter
Positioning.
Positioning.
And it usually happens with new companies. And then I think there are three powers that manifest at the growth level. There is a network effect, economies of scale, and something else. And finally, at maturing, you have process excellence and something. So there are these 7 powers. They're very logical. And he relies heavily on Porter's 5 forces, actually, but he's kind of distilled it for a simpler understanding. Basically, it's a simpler understanding of strategy. So the book's name is called 7 Powers. It's written by someone called Hamilton. And if you Google it, you'll get it. It's really a good book, and you can actually analyze companies based on that. And the final power is also this brand name. So having a brand name, for example, that's something that happens only when the companies perform well over years and decades. You can't fund a brand name, generally speaking. It has to show longevity over a period of time. A brand name is created, right? So that's the final power. So these are the 7 powers that a business can have, and at what stage of business can they have those powers? So Facebook now, what can you say? It has a brand name, yes. Does it have a network effect? Yes. So it does not need to have all of them. It needs to have at least one. So all successful companies, you will notice they tend to have at least one of these powers. Like for example, there could be a steel player who has the lowest cost of steel. Why? Because they have cornered resources of high quality iron ore, which nobody else can get. The example that Hamilton gives in his book is the Pixar family. So he said cornered resources can be in form of a team. 3-4 log hain uske andar who have this sensibility of making these cartoons which appeal to both kids and this thing. So Disney bought Pixar not for they bought it for this team actually. So and we've heard of these things, right? I mean, companies buy out other companies for the team, not for the product. Apple bought Next because of Steve Jobs. So these could be cornered resources. It's an interesting book, and it really teaches you how to think about companies, on why a company will succeed rather than the fact that succeeded or not succeeded. And once you know why a company succeeded, you are able to apply the same framework to other companies that you are looking at on why a company will succeed or conversely fail. And
so you're saying you read annual reports and then you try to position, you spend a lot of, because you've told me this earlier also, right? You spend a lot of time on industry dynamics in terms of understanding why the company will do good in a very nuanced way. This is very nuanced. This is not superficial. Yes, supplier. This is extremely nuanced.
I mean, simple things like there's a company I looked at called Lindt and Sprungli. You've heard of this, right? It's a famous chocolate manufacturer.
Lindt.
The Lindt chocolates. So it is like a 9% or 10% share of the luxury market, luxury chocolate market, if I recall correctly. It's been some time since I looked at it. So like there are simple things. They use cocoa butter instead of palm oil as fat content in their chocolates. Cocoa butter is much more expensive than palm oil, but that means it is less exposed to inflation than palm oil. So when ordinary chocolate and cocoa butter is much healthier for you as well compared to palm oil. So when current food inflation went up, other chocolate manufacturers were hit because they were paying for palm oil, and Lindt wasn't hit as much. But because Lindt has the brand name, the power of the brand name as well, they were able to always maintain that gap over other chocolate prices. So when other chocolate prices went up, Lindt prices went up. And generally what happens...
So the margins expanded.
Margins expanded. And what happens is that people who were sitting at home, bar, jaake khana wana band ho gaya tha. So they rewarded themselves with good chocolates. And Lindt chocolates, they're amazing chocolates. For those who haven't tried, I will highly recommend their chili version.
So book and chocolate recommendations both today.
Stocks and chocolate.
Which version did you say? Chili?
The chili.
Chili.
Okay. It's the chocolate that delighted me when I first had it, and I couldn't even afford it. I was at a friend's house and she offered it to me, and I'm like, chili kya hota hai? Chocolate. The moment I ate it, I swear it was amazing.
I've never heard of it before. Like,
But it is
is there
something
a
else,
chili?
man. It is, next time I come to India, I'll bring some for you if you don't find it in India first. So, but it's.
I'm not much of a chocolate boy.
Neither am I. But the chili you try, it's really nice. So I'm not someone who has chocolate on a regular. I can't remember the last time I had chocolate. Flight pe liya rahega, to yaad nahi hoga. But Lint is something else.
Okay.
So things like this. So Lint mein kya hai? Lint has got brand name, and ethical sourcing has become very important. So that's become a barrier to entry actually, because chocolates are often unethically, not often, but there are times they're unethically.
Especially with millennials now, right? So it's coffee, chocolates, all those things.
Exactly. So these guys actually go to these communities in Africa and they help them, they educate them, they have sustainable farming mechanisms put there. So these are powers that, see, one thing that we realize, right? More regulation always helps the bigger player, because only they have the power to implement that regulation. Like 30, 40, not 30, 40, but 20 years back or whatever, whenever Facebook started, itna regulation nahi tha. You and I could also sit, and if you were smart enough to program this, we could have programmed to Facebook and put. Today, you have to put up with this GDPR regulations in Europe. Har country ka alag data regulation hai. So only a company which can afford to employ lawyers and programmers and keep tweaking their code on a daily basis can afford to start up a social network, generally speaking, right? So more regulation helps incumbents.
So do you have a preference? So you spoke about these 3 stages.
Yeah.
Startup, growth, and then maybe mature.
Yeah.
And then you look for a power in each of the phase. So do you have a preference in terms of what companies do you like, the mature spectrum, or you're okay across the spectrum?
I'm okay across the spectrum. Even my fund actually kind of loosely, not loosely, more granularly than loosely. We differentiate between future compounders and existing compounders and things like that. So we are okay with all of them, and all of them have a different growth trajectory. Generally, I call them compounders and not cash cows, because cash cow implies that they cannot grow anymore, and that's why they're kind of just returning money to shareholders through buybacks and things. But a lot of companies which are actually had become stagnant are now turning into growth players as well. I'll give you an example. There's a company which provides software to lawyers. It's a very famous software. It's the number 2 player, and which allows lawyers to
in India.
Judgment.
In India,
it does it world over, so all lawyers know this.
So the one that provides citations and
things like that. Yeah. Okay. So it does it globally. Now, and they also have another product which does research. So it's the biggest repository of research in the world. Like magazines, basically, like Nature type magazines, online, and now everything is moving online. So now what this company is thinking is that we will, they have finished data tagging everything. Text rehta hai na, so they've data tagged a lot of things, right? And after data tagging, they can now build analysis tools on top of things like legal and scientific and medical journals, which is amazing. So they actually have products that can tell the lawyer based on a judge's past judgments कि वो इस केस में क्या judgment देगा. Like this is really amazing, right?
Wow.
So hitherto, what was like a library type business, which you could say ठीक है cash cow है, पैसे return करना, has now got the bandwidth to actually, because of improving IT power, improving data analysis software.
They're using this AI forbidden words now.
So these kind of companies, they actually do well, and you have to kind of spot them, and we like to speak to the management. We've subscribed to a service which also puts you in touch with industry experts. So, I mean, I prefer all of this more than broker reports, because honestly, I've been more often than not disappointed by brokers. So,
see, sell side, I have a theory, by the way, and I think you'd subscribe to it. What happens is one guy writes a report first.
Yeah.
Right. And maybe he talks to the management, he has his own motives, or the brokerage house have their own motives.
Yeah.
Most of the other sell-side analysts, at least in India, I've seen they have so much of pressure. There's so many stocks that they're covering that they don't, the type of time you need to really do independent thinking and come up with reports which are probably contrarians. These guys
Right.
don't have the time. So one
fair
guy
enough.
starts, it's like everyone else is just replicating the reports in a different language.
Yeah. No, and I do think Indian analysts on sell side are an exception. Like at least the ones that I've read or I've worked with, I think all of them spend a lot of time in the office, and all of them did work on truly independent ideas. It's the consensus numbers generally on Bloomberg that I refer to, where you kind of there's also pressure to stick to the consensus, right? I mean, I can understand that pressure as well. And eventually, if this is not a spectator sport. This is full contact. So if you want to do well in investing, you have to get your hands dirty, and I have to enjoy that process as well. नहीं तो तुम नहीं कर पाओगे on a regular basis. It's boring. If you just दिन भर बैठ के annual report पढ़ता हूँ, फिर model बनाता हूँ, फिर report लिखता हूँ. So it's actually a very boring thing. But you actually see it as understanding business, and it helps you in life as well, because in investing in politics are very pure in that sense that there are no consolation prices, right? Generally, wins and losses are very clear.
Yeah.
And it teaches you a lot about yourself and how you hone your thinking over a period of time, and you can apply it a lot in your interpersonal relationships as well, because you start thinking. And I'm saying you don't become business-like, you just become more. I mean, this is not the only way to do it, but I found it useful. But you become more sensitive and sensible about how you handle things in your personal decision making as well. Because in your job, if you're wrong, you actually lose money. So there is, इसमें कोई boss का favorite है, ये है, उसको कुछ चलता नहीं है actually. So your report card is every day in the afternoon you can see, in the evening you can see. So yeah, it's very pure in that sense, and it's really a privilege to work in this field. I'm telling you, a lot of people are not this lucky. So
I cut you in between when I think you were saying you subscribe to some service where
So basically this is a service, I think it's there in India also. It's called Third
Expert
Bridge.
Network.
It's called Third Bridge, and they have experts that they have empaneled, and you speak to them and then they charge you something, and it really helps you. So that X company, so uska koi past CEO or CFO rahega who's on this network and who charges a certain amount for. I mean, I don't know how their business works, but basically we pay them whatever based on our calls, and then we can speak to them just to understand the sector, the industry, what we think is right with the company, what we think is wrong with the company, or with the industry. And it gives you a good industry level view, because see, that guy usko koi buy sell recommendation dena nahi hai, na usko trade karna hai. You're doing it for the knowledge, right? He's doing it for the knowledge. So not all of them are great, but not all of them are bad. It's another perspective. And it really helps. This is like the closest you can actually do to what do you call it, scuttlebutt. Because you can't actually go and visit every company, right? Especially not being in that country at all. But this actually helps when you speak to different people, and you don't have to speak to one guy, you can speak to 3-4 people in the industry.
You do get access to ex-CEOs or CEOs of the
often. Or they're like some marketing head or sales head in US or something like that. And they generally have an idea of what happens. So my colleague had told me something very interesting. He said that after I do all the work, I just sit back and I imagine that I'm an employee of this company. And this is really amazing, because I never thought of it this way. Very recently he told me actually. I just sit back and I think as if I'm an employee of this company. What emotions am I going through right now? So this is interesting, because automatically your mind flips and you start thinking, "Ki wo kya dekh raha hai?" And like if you're in an online retailing space, for example, okay, he's thinking, "Yeah, I've got so much competition. My daily struggle is to ensure that these people keep coming to my site. My daily struggle is converting clicks into this thing. People move away for like 2% discount somewhere else. It's easier. There's no cost of switching, right? This is also one of the 5 forces. So there's no cost of switching. People move away. So it's a very stressful environment for that person to be in, and that person is not obviously happy. So that reflects in the stock actually. And I mean, you can do all your analysis, and after that, you have to sit, because what you are seeing as a laboratory, whatever, like a scientist, that person experiencing it actually. So if you can try and think from his or her perspective, it'll actually. And if
Very
after that you
interesting,
feel
yeah.
the company is still a long or still a short, then you go ahead and do it. So
Yeah, one of the things I've been doing is I do try to get hold of some employees, not necessarily senior level. I also read reviews on Glassdoor about what employees are saying about company. We generally you get some companies which sound so sexy on the outside. When you talk to employees, you kind of get. But at times I've heard when I start talking about top leadership, they start with CAs. It really starts at that level of frustration.
No, I understand. Sometimes the Glassdoor reviews can also be gamed by the company if they're so inclined. We've come across some of those as well. So it is. So if we ever start an India fund, our excellent shorting experience will actually help us to weed out the bad eggs. Bad eggs. So there is a lot of interest for India, generally speaking, in the world.
There is. Okay, yeah.
Because like I said, it's like demographics is ultimately economic.
Let's talk about that now. Let's talk a little bit about economics.
Okay.
Right. You said demographics is economics. Europe doesn't have good demographics right now. And you are a Europe specific fund, though you're long short, but Europe is probably the worst demographics. And it looks like if it continues the way it's continuing, it's probably a dominating region for another 20, 30 years. That's it. Right. So
but that reflects in the kind of businesses that exist there. So which is why I mentioned very high IT businesses where you don't need the demographics because your market is the world. So if ASML is making semiconductor equipment, it's not doing it for its local audience, right? It's doing it for a global audience. Sending it to, or if there's a company called Amadeus which basically runs travel, the software runs travel, boarding, everything. It's a very powerful, highly network effect company.
The Rategain, we discussed about this company, Amadeus.
Exactly. So, or if there's a data analytical company which is present across the world. So, which is why it's important to look at what each company offers. So, India, what's the easiest thing to buy? A consumer stock. तुम hair oil का company खरीद लो, it'll do well. I'm obviously not a recommendation, but I'm speaking very generalistically.
And not from experience.
Consumer company खरीद लो.
Not from personal experience.
Not from personal experience. No, unfortunately, yes. So basically, you buy a toothpaste company. These things will do well. So because that's the what you call the zeitgeist of the country. Consumers are there. Consumers live at a fairly lower end of the spectrum. They will rise up, and we will basically go ahead. So India's consumer spending as GDP as a percentage of TFC as a percentage of GDP is similar to that of the US, but US has much higher consumer spending, right? We know that, and India में बहुत कम है. Like subsistence है काफी लोगों के लिए, unfortunately, till now it's improving, of course. But
did you say consumer spending to GDP ratio is kind of same? Okay.
Yeah. So US का कम हो सकता है, लेकिन India का definitely बढ़ेगा because we can't live like this. Like, people will end up living in bigger houses, people will end up driving cars, people will end up going to better schools, people will end up buying higher amount of protein or richer food or whatever, right? So that is going to happen as India prospers, and we're doing really well so far. So in that sense, consumer is the simplest place to go. And if you look at the biggest companies, almost all of them are consumers, if not all. HDFC, eventually consumer. Barring IT companies like Infosys, etc., which is focused outside the country, focus tha. Everybody else, I think Reliance also now through Jio is largely consumer.
So you by consumer you mean like inward focused, right?
Inward focus, yes, inward focus, and not focused on necessarily on high-end technology. It's focused on distribution. It's focused on control, cost control. It's focused on credit risk control, stuff like that. So, on the other hand, if I look at my Europe book, we look at a lot of companies that have some technological edge. I mentioned some of the names earlier. So, because these companies will market to the world, right? I mean, if you if you make so there's a company that we looked at, it makes one small part of HVAC systems.
Okay.
In building. India में अभी इतना अभी बढ़ रहा है, but in places like Dubai it's necessary.
Routine thing, yeah.
Choice. And that one system controls the power consumption of the entire HVAC system. It's the smallest part. And so this company, which is Swiss-based,
and they have an IP on that system.
They have an IP on that system.
And is it used across the?
And it's like a 30-40% market share across the world. And because it is a small part of the cost of its customer, the customer will not bargain you down. This propensity to bargain you down is less, because it will cost the customer more if the customer installs the inferior part, right? For example, and let's say a year later that part blows up, and the customer should replace, because the cost of people there is very high. The customer will end up spending more getting like a electrician and a steam, and the time is shut down the HVAC system, go and replace that part. He'll end up spending more than just buying a part which is known for.
That's good economics.
Yeah, that's lovely.
That's good.
You love the company actually.
So coming back to economics, so I get your point, right? So you're saying it doesn't matter what demographics of Europe are, because you're basically doing a lot of bottom-up investing, and you're looking at companies which are anyways selling the product to the world.
Yeah.
But in general, like, what's your? Remember, I think a couple of weeks back, I was working on a hedging transaction. So I asked you, what's your view on IBORs?
Yeah.
What's your view in general about how does the whole drama that's happening with the Fed plays out? 6 months, year, 2 year, like, have you thought about it in terms of how it goes?
Honestly, I haven't thought about it, because this is the normal ebb and flow, right? I mean, see, the Fed can't push it beyond the limit, because a large percentage of US debt, I don't remember the exact numbers, is actually barely investment grade, and these companies cannot sustain high interest rates. If you look at commodity prices, they have come off quite a bit from their peak. If you look at copper and things like that, food prices are a little elevated, of course, but they have come off their peaks. So I personally don't see the Fed endlessly raising. Maybe another two meetings, perhaps they'll raise. But like I said, I honestly don't have a view, and it's very difficult to have a view, because it doesn't affect my investment style at all. And see, if you want to have a long career, right, in anything, these are blips actually, because this goes up, goes down. I mean, these are not extraordinary. Extraordinary circumstances have become ordinary circumstances. The crashes used to have 10 years in between. Now they're happening every 3-4 years. So, I mean, we had one in 2000 and 2004, then 2008, and then 2010, and now we're getting
13. Yeah.
2013. We had 2018 mein hota shayad, and then now again 2022, 2020. So these are fine. I mean, this keeps happening. The idea,
but you don't think it's the end of the world, like?
No.
See, there are two groups of people, right?
Yeah.
Even within India. I was telling this to students also the other day. I know few family offices, like really smart people. These guys have started buying in the market now, and which some would say, because and then there are other group of people I know who would say markets are due for 30, 40, 50% correction, and the economy it's like the end of the world. And then people are drawing those parallels to 1970s and 1940s. So you're not worrying about that at all.
So see, there's always going to be some disaster that it's going to look like, right? But how quickly the markets recover after that? See, two things we need to understand. One, has the basic economic situation changed in India? Now, if the government takes some stupid steps, increase the tax to 50% or whatever, even that can be reversed. This country is seeing 97.5% tax off. So, but even that can be reversed. But something that structurally damages the country, or the company does something structurally which is wrong for them, which is not your investment case, like a housing finance company goes and buys a biscuit manufacturer or something. I'm just making up the most absurd thing I can think of. But unless something like that happens, there's very little risk, especially if you're a long short fund. because you're always finding there are a lot of companies in India to short, right? I mean, there's no question. So if you are finding opportunities there are ways you can actually do it. But globally, I do not see this as the end of the world. I mean, think of what we've gone through, right? We've gone through a pandemic that shut down the world for almost 3 years. Like nobody had expected that the world would shut down. Like not just travel, people are not leaving their houses for 3 years almost. Then you started off with a war, and then you have this Fed issues and inflation, which is bound to happen at some point, and then you have the Bitcoin collapse and whatnot. But despite this, everybody's still standing. There's still peace and calm outside. People are not rioting outside for economic reasons anyway. So you can see that given the situation that we are in, there is a phenomenal level of calm in the world, and it's not calm of ignorance, because you're all every time you turn on TV, everyone's focused on this. कि कभी भी crash होगा, कभी भी crash होगा. हो सकता है. I'm not saying कि नहीं होगा. I'm just saying that do you see the market staying at that level 10 years hence? Simple. I don't see them that way.
Yeah, absolutely.
So crash होगा और मैं खरीदूंगा, तुम खरीदो.
I love that optimism.
It's not blind optimism, right? I mean, you can see it in the world. Like you're seeing, you see students come to you, your classes are full, people are hopeful about giving CFA.
Yes.
Such hopeful faces in front of you, and you can't not be an optimist.
No, and anyways, India is a different story altogether, right? So I think even if there is massive inflationary pressure or whatnot, I think India as a story is just like you spoke about all the nice things.
Yeah, in India, inflation pressure क्या है? 7-8% में normal हुआ करता था for a time. So ये तो
correct, yeah. Yeah, 7-8% we used to it. It's only I think last few years. Okay, so I'm going to ask you a few pointed questions now. My team wanted, so we kind of, before speaking to you, we collated a few questions from people. So here's question number 1. Can you simplify to the audience what is a hedge fund and how is it different from the other category of funds?
So hedge fund, it's in the name, it's allowed to hedge. So we theoretically take who is willing to take assume a higher level of risk. What we do is we take positions on both sides of the market by going long some things that we like and going short some things that we don't like. Hedge funds typically carry a higher fee structure because we typically aim to provide higher amounts of return for the higher amount of risk that we have assumed. This contrasts with normal like mutual funds, etc., which typically invest or take only long positions in secularly growing. Ideally, they should take in secularly growing companies and they hold them for a long period of time, and hence they charge you a very small percentage, 2%, 2.5% types, to just hold those investments. So to simplify it simple, hedge fund takes positions on both sides of the market. We assume or theoretically are allowed to assume higher risk because our investors are higher risk tolerance investors, and we get paid slightly more for that reason.
Great. Second question. What's the entry-level job in a hedge fund and what's a typical career progression?
So I haven't worked with a lot of hedge funds. I've worked with 2, of which one was my own and now this. So entry-level job would be an analyst. Ideally, if you want to go operations side, obviously you can become a CFO, CEO, lawyer, operations, trade settler. These are very fulfilling professions as well. But I assume the question is about analysis. So the entry level is probably an analyst. You will end up looking at companies. Some hedge fund will do like esoteric investments, structured options, stuff like that. We do not do any of that. I mean, not in any major way. That's not the focus of the fund. You'll end up ideally building models, maybe writing short reports, making presentations, and you will most of the time be working on your own because nobody will have the time to kind of guide you beyond a point. Obviously, there'll be some pointers given. I'm speaking very generally. There would be exceptions, of course. And so it's really a time for you to shine, because if you show them an independent way of thinking, an independent way of doing analysis, a sound basis of doing analysis, and you're tested because the investment pitch meetings are sometimes quite argumentative. So, a little bit of calmness, and most of the calmness comes from knowing your subject well, because you're able to answer.
Yeah.
And there are some questions you can't answer. You can always say that, look, I'll check this and get back to you, but that can't be the answer to all your questions. But basically, that would be the level of job that you expect. The career progression would be, ideally, most hedge funds work in small teams, because it is a melding of largely like-minded individuals who don't agree with each other. Now, this is a dichotomy, but it is important, because we see the world in a similar way, but we may not see a specific instance in a similar way. And you want that, because you want the other person to challenge you, because there might be something you've not seen in a particular stock or investment. So they typically work in short teams. So generally, the progression is fairly small. You can be an analyst, and you can probably be responsible for part of a portfolio, and then you can eventually run the fund, as a partner or something like that. So, but generally, hedge funds will have one person who pulls the trigger, and that's usually the best way, because you don't want. So you can all be speaking that person's ear, but finally, that's the guy or the lady who will pull the trigger. And we have that way in our fund as well. Eventually, if you grow big enough and you're confident enough, and you're confident of your stock picking, you have that rapport with your investors, you can eventually set out and do your own fund at some point, where people would want to invest with you for your style of investing. So yeah, the
there's not a lot of hierarchy. It's probably
it's not
you're an analyst all your life, and then one day you're a fund manager.
It's the farthest thing from a bureaucracy that you can think of. Because there is no job security. So
there's no job security. Yes, very important. Next question I have: what kind of pays does one get at entry level? And I mean, let's forget the higher level, right? Because then that's probably everyone knows.
Okay, so that's highly geography dependent. Like, the kind of pay you will get in India will probably be very different from what you get abroad. That also, whether what you get in Europe, what you get in the US, what you get in the Middle East, alag hoga. I think that the main pay factor in a hedge fund is the bonus, because I mean, that's something that you really want a good chunk of. So what kind of pay would you get? Like, for example, I know someone who's employed. It's not a hedge fund; it's a long only fund, so that changes. He pays. It's an entry level guy. Like, this guy is literally teaching him how to build models and things like that. Gets paid around 45,000-50,000 rupees a month.
Rupees.
No, because he's based in India and he's absolutely new. And there's a long only fund.
And it's an Indian fund.
Indian fund. I will not ideally pay that much. But if you look for a hedge fund abroad, I think you should try to get a salary entry level, at least. I'm speaking very ballpark, $60,000 to $70,000 to start off with. I think that's probably what you want. What you start with, because your main thing is the bonus, right? I mean, that's important.
So bonus on good years, bonus could be at par with your basic pay, maybe more.
Oh, easily more, because I mean, it's very normal. On a good year, it's normal to get like 100% bonus. So it's not unheard of, and the level of bonus also depends on the assets under management. Obviously, if a fund which manages $500 million would pay you a very different bonus than $1 billion or a $10 billion fund. But that also increases the work, the stress, the responsibilities that you have. Because I mean, just think of this, right? If you have like a 5% cap on the exposure to a particular name, or a 3% cap, for $10 billion, how many stocks you need to own? How much you need to know. So तुम्हारा team भी बढ़ता है थोड़ा. So that happens. But in general, this is a like, pay is not usually a constraining factor for the right candidate. Pay will not be the constraining factor.
Yeah, it's a money job.
Money. You deal with money, right?
Okay. I am a 21-year-old kid watching this interview today. My dream is to become a hedge fund manager someday. and what skills should I acquire? What should I read? How do I prepare myself? What courses should I do so that 10, 20, 25 years down the line, I do end up becoming a big hedge fund manager?
So any courses which teach you to deal with complexity. So it could be CFA, it could be engineering, it could be CA, basically second order, third order derivative thinking. I personally, so I did CFA much later in my life.
After becoming a fund manager.
Yeah, I had time. I had taken a break from work. I was doing a lot of things that I.
By the way, I remember that day when you came, right? When you walk into a classroom, I think it was a level 2 class.
Yeah.
And I think after, a couple of greetings, you said, I was a hedge fund manager or something like that. I remember you said something on this.
Yeah.
Like, what is a hedge fund manager doing in a level 2 class?
So this is a funny story, right? Because what happened is just the day before I came there, I was going through some old emails. मेरा Hotmail account था, उसमें से मैं old emails देख रहा था, अभी भी है. So and I came across a CFA का this thing.
Having a Hotmail account tells us what generation you're from, by the way.
Exactly, and this is the first account I ever created. So anyway, so I came to the CFA का एक email था, मैंने खोला क्या mail था, and then I saw कि अरे congratulations you've passed level 1 ऐसा करके. And I clicked on that link to see क्या score था मेरा, and it took me to the level 2 registration. I've cleared this exam 10 years ago. So I had given that exam just before I got my first buy-side job, and then I just completely forgot, right? Like the period's a little blur for me actually. And they're still accepting my 10-year-old level 1 result. I'm like, I have time now. I'm doing things that I wanted to do, things that I always felt like, and now I can complete this. So I decided that if I'm going to do it, then I'm going to do it properly. After so many years, you kind of lose habit of sitting down and studying for a long time. So I knew I needed help there. And that's the best part, right? I mean, if you know you need help, you should simply ask for it. And more often than not, you will get it. So I asked someone and they said that one of my friends, she studies with you. So I said, I mean, I don't know, right? I'll just go in there. So I went there and I met you. I love the way, you have a very calm way of speaking. And in fact, I mentioned this to you as well. It's a very soothing voice, actually. So I said, I'd love to join. And you said you sit in for a class. So I sat for like some time, and I said, fine, I'll go back, pay the fees, and get done. And that really helped me. Because
but having you in my classroom would definitely put a lot of pressure.
You used to make me stand there. What the hell? What pressure
that I do everywhere.
But no, it was a great, enriching experience because primarily being in that this environment again with the students, right? Like that it actually told me that I would like to teach at some point in my life because it really did excite me a little bit, in order to kind of be with these young people and their aspirations. And you should always be young at heart, whatever your age is. So that really helped. And it helped me with my studies as well because I was able to kind of clear doubts and stuff like that. So CFA as a course will help for a newcomer primarily because the fund manager shouldn't have to explain to you what ROC is. जो मेरे साथ थोड़ा हुआ था when I started working in broking, because CA is a compliance focused course. It is not an analysis focused course. अभी change हुआ तो मुझे मालूम नहीं, but so we did have financial management जिसमें ये सब DCF ये सब था, but it was not the focus. So I mean I was naturally very good at it. So I didn't actually study that a lot. So I spent time doing indirect tax, direct taxes. But someone says कि तुम ये करो like EBITDA and stuff like that. These terms were a little alien to me when I started in sales. So that should not happen in a fund. So doing a course like CFA will actually help you to do this. In terms of reading, like I said, Competitive Strategy by Porter. You can also read that 7 Powers. I think it's by Hamilton. I'll just Google and tell you. It's by Hamilton. Is very important. Read annual reports. Annual reports padhne ki aadat dalo, because this is something that will really help you. Because you need to figure out what's important, what's not. Sometimes a throwaway line here and there will tell you something about the company that you need to know. Prospectuses you should read, especially the business section. Prospectus you can't read from cover to cover, but the business section, the risk factors, stuff like that, you should be able to know. And that helps. What other books? Any book I mean, the huge, like Warren Buffett's letters and stuff like that. A lot of people will say these. Personally, I haven't read Warren Buffett's letters. I have.
That's because you're a very bottom up.
Warren Buffett is a bottom up guy as well, but I think what
a lot of his letters are, generally very broad based.
So yeah, I mean, I'm sure I will be a better human being if I read those letters.
I love them.
Yeah, I just haven't read them. Yeah, so
a lot of wisdom, I guess. Like in general, I read them for wisdom, like just the whole perspective of life. Right?
Kali Mangal's almanac.
Almanac, yeah,
that's there.
Yeah.
So read Asterix, read Tintin. Very important because the quality of artwork is very important. Is very nice. It's a good relaxation for your mind. The humor is of top quality, especially in Asterix. Yeah, read Jeeves and Wooster. Read all these. Read good literature, not necessarily serious stuff. No War and Peace if you want, but read good literature because it'll help you. It'll help you as a person. And so I remember one incident that had happened, and I told that guy, I'm going to steal this line of yours, and I'm stealing it from him, and yahan pe maar raha. This guy used to work in an IT company, and all his IT guys used to show up, unshaven and sometimes unbathed in like t-shirts with torn collars, and desk पे सब खाना वाना रखते थे. वो बिग बैंग थियरी वाला जनरेशन था, तो उनको लगता था सब साइंटिस्ट हम लोग ऐसे हैं, तो so, and that guy used to tell them, and they used to say, boss, we went to MIT or IIT or whatever, and you don't understand. You could banda IIT में गया था वैसे, but they didn't know that, so you don't understand and stuff like that. So he gave them an amazing explanation. He said कि तुमको life में पैसा बनाना है ना, so they said yeah. Obviously, who'll say no to this, right? He's like, in the last 10 years of your career, you will make more money than you have made in the first 35 years of your career. So, but to do that, you need to forge connections in those 35 years. And those connections are not forged by dressing up like a hobo, being, impolite, being uncouth, because no one will want anything to do with you, right? Forge connections. So if you want to make money in those 35 years, conduct yourself well, that people want to be associated with you, and you will make eye-watering amounts of money in the last 10 years of your life, which is much more than what you've made in the first 35. So generally, I would like to advise is dress well to companies. I'm not an example right now because I'm home, but shave when you go to work. Be well groomed, be well spoken, which reading a lot will help you. Think before you speak. Focus on your life first. Don't go into activism very early in your life. It doesn't help. You can't change anything. Make money and fund whatever projects you want. So focus on your life, and yeah, that's about it. I think a lot of people lose focus. So I was very lucky to grow up very poor. So I didn't have a lot of distractions. I didn't afford distractions. So not everybody is that lucky. So then you have to 100%.
100% agree. 100% agree.
So you have to focus and discipline yourself. So, and exercise, lift weights. This is what I'm going to tell everybody. Lift weights. You start losing muscle mass up in the age of 30, 35, and it gets really bad after that. Lift weights. Running is not exercise. Yoga is not exercise. Yoga is for a higher purpose. Lift weights in a gym. So yeah, and all of this will help in analysis because your brain remains primed. See, if you're thinking a lot, like it sounds like very holistic advice, but it's actually very practical. When you're thinking a lot, you end up getting fatigued a lot because your brain consumes the most amount of calories. So you have to keep yourself in a prime shape to actually work as hard as you need to work in a hedge fund. And you need to analyze. It's not file clearing ka job nahi hai. So you have to actually take a risk, and you have to be able to stand up to scrutiny when your investments are questioned. So it all adds up. It all adds up, and it makes a change in your mindset. So the first company where I actually had to dress up really well was Legato, because I had to wear suits. And I swear, I actually felt a difference in the way I conducted myself when I was well dressed versus when I was not. I had to wear like expensive suits, Salvatore Ferragamo ties, and expensive shoes, and Swiss watches and stuff like that, but it made a huge difference to the way I thought as well, because it made a huge difference to the way I was perceived. So I don't know, maybe it'll work for people, maybe it'll not. But if I had to advise someone, this would be the advice that I give.
That's holistic. I think more than just getting a job, words of wisdom, honestly. A lot of things I truly myself believe in when you put it in better words.
No, I think, see, what happens to you in your life is an outcome of a lot of other things that you do in your life, right? So, job is not the be all and end all. If you conduct yourself in a certain way, if you think a certain way, I'm telling you, there's a dearth of people who have common sense and who are able to apply it. Investing is common sense. लोगों ने हवा बना के रखा है बस. Investing is common sense. If you have common sense, you are already in a massive micro minority in this world. And people like that who can think critically, who can think independently, who can communicate well through writing and through speech, they are a short supply, I tell you. I'm telling you, you'll be shocked by the number of people who will be running behind you if you can do these things. You need one job to prove yourself, no question. But uske baad to line lagegi.
Fantastic. Anirudh, this has been really, really interesting conversation. Thank you very much for doing this. It was fun talking to you.